A lot of the time when I talk to people who are actually skeptical about blockchain and crypto, the main argument that I find that people have against cryptocurrencies is that they have no intrinsic or inherent value, which is protected from being replicated at a lower price. And this is actually a valid argument and something which I feel does apply to a number of cryptos out there. Because what the argument is effectively saying is that because crypto is so unregulated, there aren't really many enforceable legal measures which can be taken to prevent somebody from copying another crypto and using the same or better technology and copying the brand strategy and making it more attractive to use, which presents a real danger to investors. Just imagine the trouble that would ensue for investors if anybody were able to copy Coca-Cola's recipe and brand, or produce Apple products and then sell them as being genuine legally. And so this creates a lot of trouble in crypto, and what we have seen is a type of hyperinflation in the market, in terms of there being tens of new crypto projects being launched every day, which are all very similar and which are all using the same types of technology and branding strategies, and supposedly unique selling points as everybody else. And this is very problematic for certain currencies, but I want to make it clear that this does not apply to all cryptos, and the reason being because certain cryptos known as utility tokens have found a way to achieve the kind of brand protection and competitive advantages which keep businesses like Apple trillion-dollar companies, advantages which can't be copied easily. If you can't enforce a trademark or brand imagery or even a patent for a technology, the only other way to protect yourself is to build a business around the crypto, and make it so that the currency is the only one that can be used within that business to execute transactions, meaning that the competitive advantages generated within the business in terms of the services offered are actually intertwined with the cryptocurrency, giving it the same level of protection as any other business would enjoy. And these are the types of projects into which I invest, currencies which are part of businesses and which produce an income, and actually, in my opinion at least, nobody has done this as well as Vechain have. A lot of people that I have talked to or seen and read articles written by talk about cryptocurrencies lacking intrinsic value, and therefore being worthless, as there is no unique value which can't be copied directly. And while this argument is applicable to certain cryptos, in fact probably many cryptos, it's definitely not true in every case, and I think that Vechain is one of those cases. I've spent a lot of time contemplating intrinsic value and what actually makes an asset valuable. And of course what makes an investment asset valuable, whether it be a piece of real estate or a stock or a crypto, is its ability to produce value for investors through income and through appreciation. And so if a crypto project like Vechain has a number of partners, with revenues in excess of $1 billion and is growing quickly and all of those partners are buying VTHO, which is produced by VET through a staking dividend, that means that the ability of VET to produce income is there, and it's growing at a high rate, and surely an increase in the income producing power will translate into an increase in its value as well, if the growth can be maintained. I think that there are a lot of people out there who do not understand that cryptos can be income producing assets, and can therefore be a legitimate asset as good or even better than a stock or a piece of real estate, if the project fundamentals are good. And what this means for one thing is that there is a lot less people looking for investments like this than we have in the stock market, which is of course good for those who are, as it means that there is less competition trying to find these types of investments. Of course recently the crypto market has been booming and we've seen a huge influx of new people into the market, and that in itself has made finding bargains and reasonably priced cryptos much harder than it was a year or two ago. But again, moving back into the main point of the video, you see, when a utility token in the form of a cryptocurrency is wrapped around a business model, which uses blockchain technology to provide some sort of useful real-world service, the value of that business can be passed on to the value of the currency. And as in the case of Vechain, the actual profits of the platform are not retained by Vechain, but are designed to go to investors in the form of staking dividends. And if an investor can find a sound opportunity to invest into a crypto, which is wrapped around a business that is growing quickly, then there really isn't much difference from investing into the business or platform itself directly. Apart from that, the currency is going to be much easier to buy and sell and therefore much more accessible than trying to buy equity shares in a privately owned business. Anyway, that's all for this video. If you enjoyed and you'd like to see more content like this in the future, be sure to subscribe to the channel and thanks for watching.